All right, let's turn our attention to the alert I'm receiving. The alert that I'm receiving indicates that we were trading in a range for the past 4 days and ending the week toward the bottom of that range and then a gap up to the top of that range. However, that range is being respected. Therefore, I think I will put out an alert, a red alert, battle stations. This is going to be a rocky ride. It's going to be a rocky ride, and I'm assuming everybody gets it. It's time to sell short. Actually, let's buy short. You could sell short and sell short at the bottom of that range. I'm doing some calendar puts. I'm estimating that the stocks are going to hover in a range till the end of the week, and unlike this week, they're going to go down. So put in your calendar put. I'm putting in a put at the bottom of the range for next week and selling the bottom of the range this week. Peace out. Good luck. Peace out. Good luck. All right, here's that range we're talking about. We're talking about a range from 200 down to this yellow line, marked off by yellow lines that were arranged in the past. That range there is from 200 to 193, we'll call it. 200 to 193. Points of interest for me are volumes. Volume there, of course, when those lines intersect. Volume when those lines intersect. That's what the chart is telling me. At the bottom of the chart, it's telling me that there's volume wherever I'm drawing a line. Okay. Boom. So we're drawing these out to show you where this stock is overextended from. I'll tell you it's overextended here. Okay, that brings us, we'll have to look at the RSI for a very short period of time. That's the base. Let's create a new range, shall we? These ranges that I see from 203 to 193 is about $10. See what I mean? It looks like you're going bull here, but it's way too far, way too early. You got previous resistance here. And we're not getting there. This range has been respected, even though there was a massive 10% gap up on a lot of stocks today, or whatever, 3, 4, 5. Tesla shot way the hell up. But look, this range was respected. So we gotta examine it's in the middle of that range. Look, I'm bearish because I don't see how tariffs are gonna get resolved between now and tariff day. I think we got a lot of messages coming. So I'm targeting this price here. From Friday. This is my target. For 2 weeks out. My target in 2 weeks out. Any questions? All right, so here is what we're looking at. Open interest. You got a lot of people thinking the stock can get down to 190. Okay, you got a lot of people thinking, a lot of people thinking that we are oversold here. There was a lot of contracts here. Anyway, that's complicated advanced topic. This 190 level, that 190 level is where people think this price could go. I think that that's fair based on the bid and ask for the calls and the puts. It's probably closer to going to 192. All right. So 192 is our target. Okay, our target is 192. I'll show you the prices here because ticket is complicated. $192. So I'm gonna buy the 190, not just the 192. It's a complicated ticket. Buying the 190, buying the 192. Complicated ticket. Couldn't buy 192. 187.50. It comes in $2.50. So 192.50. They're asking $30. They're asking 14. It's about a $45 trade. $46. $46. The 192 put plus the 187. 2 and 1. I'll split the difference. I'll meet you halfway at 195. That means I'm going to sell the middle contract, which means I'll split the profit of a put from 192.50. If the stock goes down to 187.50, I'll split the profits with you. That's costing probably less than 46, which is how much both of those puts would cost. Well, the price seems to be changing as we speak. Nope. 46 to get into two puts. There you go. Half that. No, $6 to get in there. Chump change. View the order. Look at that price, $6. Let's revisit that price tomorrow. See how that's working for us.